I've been told that the recording is in progress now. We can start. My name is Harriet Nanono. I'm in Uganda. I'm a Ugandan cryptocurrency trader and a trainer. So, and I'm glad to be your trainer this evening. And we are going to look at an indicator, another indicator. Yesterday, we looked at an indicator which is called volume spread analysis. And then we realized that if you are going to trade and you are going to have powerful trades, or for you to trade in the market when you are not so worried of what is going to happen or what is to happen or what is happening, when you use an indicator called volume spread analysis, it will always tell you whether the market has strength or not. And the strength can be either for buyers or sellers. So it is both. And then we sort, if we go to our trading view, where is it? It's here, powerful tool. It is a powerful application. If you want to be a powerful trader, you must be having this one. You must be having this this application called the WA. Oh, the Bitcoin is moving. I can see it has moved ahead, the positive side, by 1.54%. And from the time it started, from the time it went to the positive side on its price, it has added on over $400. That's what it means. So I am teaching you indicators, but I'm also teaching you what the trading view is always indicating. Now, when you look at this 1.5, that is the percentage it has moved from the time it moved from the negative side to the positive side, that it has moved 1.54%. And 1.54% from when it entered the positive side, on the price where it was, it has added like 401. So which means by the time it entered in the positives, it was around 26,400 something. So it had done something. So always when you go to your trading view, don't ask what do these ones mean. Sometimes you are going to find them when they are red, and other times you are going to find them when they are green. They are green when the market has gone to the positive side, and they are red when the market has gone to the negative side. Let's look at this. Let's look at the Bitcoin. Always when you click on a currency, it brings you this. So for you to see the chart, always come here to this box like something. You click there, and then you see the chart of the currency that you want to look at. This is my Bitcoin. My Bitcoin, my God, it has a lot of lines. Don't mind those lines. I draw a lot of support and resistance. I want to be knowing where the Bitcoin is and where it is going, what is its next move, and I always want it that way. So I had put my in 1 day time frame. Let me change to 4 hours. I always want to be in 4 hours because the 4 hours gives me good. It gives me good what? It helps me to analyze the market very well. Okay, we see the Bitcoin. It came here on I'm looking at my resistance. It came here, that was my resistance. Then this here, it was hit twice and then it was rejected. It came back, it hit there and it was rejected. It came back yesterday and it was rejected. Today it has gone through. If all goes well, the Bitcoin might be going here. Let me show you. If all goes well, we might see the Bitcoin moving up to around here because I see some resistance here, some concentration here. So I can put here my other line, which is the resistance. My next resistance is there, according to my 4-hour time frame. Our next resistance is there. We are glad that this one closed above the resistance and now it became a support. So if we don't come back here, okay, if we don't come back here to close below, this line that I drew, then it means we are heading here. We are heading to 27. We are heading to 20. We are heading to 27. We are heading to 20. We are heading to 27. Why? Because when I look here, look. Oh, a Ugandan is here making a lot of noise. Excuse me. Someone is making a lot of noise. Sorry, friends, I am back. Sorry, I am back. Okay. I was saying that the Bitcoin, according to the resistance, the lines that I drew, when I see it was a strong resistance. Why is it a strong resistance? Because if I see here, it was here, we looked at this. Here it was hit and then rejected. It came here, it went through, then it came back here. Then if I continue looking at it, here it came around here. The Bitcoin moved. It was in concentration. It was on concentration or consolidation for very many hours, for very many days, because I'm in the 4-hour time frame, which means every 4 candles, that is every 6 candles, that is a full day. Every 6 candles, that is a full day. Now it came here. We thought that if it breaks here and then it closes above, it will go. It tried, but again, it was rejected here from here. It came again, it came down, concentration. Somewhere it was pushed, the sellers pushed it so down, and it came this way, and then it came back. At some point, we thought that, since it has broken here, it is going to go, but again, it was rejected. It came down up, and then it has been concentrated. It has been trying to break this resistance, and then this resistance was broken. Even this one was broken, so we are this way. If we are here, if we don't come back to this, but of course we have to come back and retest, okay? We have to come back and retest. When we come back to hit it the next time, if we close above, then we shall be heading to 27,100. We shall be heading to 27,100. Now, that is not what I want to talk about. I want to talk about what we looked at yesterday. Yesterday we looked at a certain indicator, and we called it the volume spread analysis, and we said that every time you are trading, it is always important to go and look at what is the volume, how much volume, what is the volume saying in that trade, what is that? And then we said that when we look at the volume spread analysis indicator, it is always down here, and then it has 4 colors. Okay, we saw that it has four colors in it, and then we looked at, we said it has a red color, red meaning very high volume. Then we looked at yellow, and then it was high volume. Then we looked at green, and then green we said it is average, and then blue we said it is very low volume, very low volume. So for those ones who are not there and you did not attend yesterday, you should know that the indicator that we looked at yesterday, it has those colors. So red meaning that the trade has very high volume of both either buys or sells. So you can see a red bar while the sellers are dominating, or you can see the red bar while the buyers are dominating. Okay, while buyers are dominating. Now, when we look at Bitcoin from the too much concentration that it did, okay, from the too much concentration that it made some time ago, because we can see around here where there was a lot of concentration. When you look at this indicator, we could see the Bitcoin was having just the average volume and very low, average volume and very low. But again, when it was average, we can see it was not even exceeding this black line, this band here. It was not even exceeding, it was just below, meaning that the volume was not so much. So that's why the Bitcoin was not moving, and anyway, like it is not moving upwards, it is not going down. So it was undecided either to go up or to go down. And when it started showing some signs of big bars or bars moving above this black line, when you are putting in your volume spread analysis indicator, you will be seeing that line. It is always important to put in a trade when these bars are either hitting that line or above that line. And when the bars have moved and they have gone through this cloud here, this red cloud, you better get out of the trade, because the next thing, if the market was going up and then you see that the bar has gone through this cloud, just get out of the market, because it means the trader has gone so high. So the next thing, it has to come down. The next thing, it has to come down. Why? It has moved so high. Now people who put in the buy orders, they put here their take profit. So their take profit has been hit. So the next thing is they are selling. The more they sell, the more the prices are going to go down. Hoping we have understood that one. I don't want to waste much of our time on it. Let's go to another indicator. Today, we are going to look at another indicator. Friends, if you are okay with what I have so far talked about with the volume spread analysis, a recap, please go to the chat room and then let me know. Put there a 0. Go to the chat room and put there a 0. Go to the chat room and put there a 0. Put there a 0. Put there a 0. I have only Juliet who is following. The rest are not there. I see Prince Francis from Nigeria. I see Otai Abraham is saying a 0. He has understood. I know Prince, yesterday you were not there, but I was just trying to bring you up to where we are. Okay. We can move from there and then we go to see another indicator. Let's see another indicator. Remember, I said if you want to put another indicator, in your chart, you go here. Go to this plus. Go to that plus sign. Click on it. When you click on it, it is going to take you to indicators. So when you click indicators, it is going to bring you very many. For me, I have favorites. And then I told you there are very many. The indicators are in technicals. There are so many. So many. This trading view has very many indicators. So there is no way how you can fail to have perfect trades with all these indicators that can as well help you to do what you are supposed to do at the right time. Okay, today we are going to look at another indicator, and that indicator we are going to call it Stochastic Relative Strength Index. Stochastic Relative Strength Index, or we are going to call it Stochastic RSI. Stochastic RSI. I am removing this volume spread analysis and I am going to add another indicator called the stochastic relative strength index. That's what it means. Always when you come to it, tap on it, then it is going to highlight. The moment it has highlighted, it means you have put it in. You have I clicked on it twice. You have put it in your chart. It is there. This is how it looks like. This is how it looks like, the stochastic. So it will show stock RSI. It is an indicator, very powerful, and it is not a lagging indicator. It is not a lagging indicator. Every time it shows you what I am going to tell you, you will see how the market moves. Okay, you will see how the market moves. Now the stochastic RSI, it has these things. Okay, it has 3 major lines. Okay, it has 3 major lines. Let me change the color. And then we have this one. We are going to call it the lower band. It has this one. It is the middle band. And then it has the upper band. This one is lower band. Lower band. This one in the middle, it is the middle band. Middle band. And then this one up, it is the upper band. Everything has a reason as to why it is there. Everything has a reason as to why it is there. The lower band, the middle band, and then the upper band. At the lower band, we are going to find there a lot when the market is moving, and then the stochastic, it is at the lower band or below the lower band. It means that there are a lot of buying orders. So the buyers are waiting from there. The buyers are waiting from there. Why are they waiting from there? Because they know that the market has gone down. The prices are so low. The prices are so low. The prices are cheap. So they put their orders there where the lower band is and a little bit below the lower band. The buyers are there. So there are a lot of buying orders there. Then in the middle band here, sometimes we are going to find that there are sellers there who want to sell off what they bought while at the lower band, and then they want to sell off. While also we have those ones, the sellers, they are putting here their pressure here, they are selling in order to stop the market from moving up to go to the upper band. So what does that mean? Many times when the market is showing when it is showing while this way in the charts, and then it way down, and what the stochastic is saying, so this one will mean as it will be a support, while this one is resistance. When this one is broken, then it means this one becomes a support and this one becomes a resistance. So I remember I told you all indicators in the trading field, all indicators can be support and resistance. Okay, can be support and resistance. Now, the stochastic, when the market is moving and you look at the stochastic and it is down this way, it is below 50. We have now. Let me first show you. This band, or this is stochastic that we are talking about. It has the lines. This lower band is always at 10. It has numbers. This lower band, it is at 10. Then the middle band is at 50, while the upper band is at 90. That is how it was numbered. Okay, that is how it was numbered. Now for you, when do I know that I have to enter the trade in the right way? When the stochastic moves and then it goes at the 10 line, and then it goes below. Okay, it goes below, like you see here, somewhere here, like when you see here, somewhere here, there is a way how it moved, either at the 10 line 10, or it went even below. So just know we say that the trade or this coin or this currency is in the overbought It is in the overbought area. So the people have bought and bought and bought. They have bought too much. They have put in a lot of orders. They have bought because the prices had gone so cheap. Okay, the prices have gone so cheap. And again, when you see the stochastic or the trade is moving and the stochastic is showing you that it is moving up, then it means also when you look up here, you will see that the candles are also moving upwards. Okay, you will see that the candles are also moving upwards. So when it moves and it goes through, it moves from the 10th line, it goes at the 50th line, and when it goes up to the 50 line, somewhere, somehow, a retracement can happen from there. Okay, a retracement, a change of direction can happen from there. If it is broken and then it goes up, it goes above the 50. So it has gone into a very good area. But again, when it reaches 90 and then it goes beyond 90, it means it is in the oversold area. It is in the oversold area. What does it mean? It means the market has been oversaturated, or that it is too much. So people are going to start selling and selling and selling and selling. And when they start selling, their take profit has been hit, has been reached. So when they start selling, what happens next? The prices are going to go, and then you will start seeing the market going down. Or even when you look at the charts or the candles, you will see them. Every time you see the stochastic going down, you will see the candles going down. When the stochastic is going up, you will see the candles going up. When it is going down, it is going down. When the candles are going up, you see the stochastic going up. Now, how do you use the stochastic to put in a trade? To know that, this is a good indication for me to put in a trade. When we look at this stochastic, okay, it has two lines or moving averages. There are two. There are two. We have one which is blue. We have one which is blue. And then the one which is blue. And then the one which is, for me, it is, I don't know, is it yellow? Is it gold? For me, it is gold. But again, you can put it, you can name it, you can give it any color that you want. We shall see in the settings. Now, every time you see a blue line crossing, getting above the gold line, just know we are going up. When you see a crossover like this one, the blue line crossed over and then it went above the gold line, just know we are going up. And again, when you see the blue line crossing and then it goes below the goldy color or the yellow line, just know we are coming down, okay? You will see those things, okay? Every time for the stochastic, if you want to do trades, to put in trades while following the stochastic, always look for these crossovers, okay? Always look for these crossovers. You look at that crossover, you see it, just put in a trade. Take a 2%, that is if the market is in the consolidation kind of market. So if you see that it is a good trend, it is an uptrend, a good one, and it is distinct, just put in your trade and then take 5%, or even 3%, or even 10%, because just know that the trade will move up to the oversold area. And make sure that if you have entered you have seen the crossover while it is at the oversold or it is at the 10 line, move, put in a trade, get out of the trade at 50 line or slightly below 50 line. When you see it is broken, you can enter the trade again and then move and then get out, especially when it is around 70. When it is around 70, 80. Never wait for it to reach 100, because by the time it reaches 100, there will be a lot of pressure there and it will be pushed. It will be pushed. Is it pushing? It will be pushed very fast to come down. And then you might get into losses, or you might get into floating losses. Okay? So it is always important. Enter the trade. Enter the trade at the crossover. Okay? Enter the trade at the crossover. Get out at the 50 line. If you see it still moving, enter again, get out at the 70 to 80 line, around there, around here, before it hits the 90 line, okay? Before it hits the 90 line. So when I just started learning these things, for me, I was just looking for the stochastic, and I could look at all the coins one by one, looking for a crossover, because every hour there is a coin which is doing a crossover. Every time there is a coin which is where the stochastic is doing a crossover. Okay, let us see when the Bitcoin made this crossover. Okay, let's look at those crossovers. Okay, let's look at these crossovers, and then we prove that when it makes that crossover, the blue crosses and then it goes above the yellow one. Do we see a substantial movement? Let us see. Let us see. Let us see. Let us prove. Look here. Look here, when it made this crossover, there is that movement that moved. You can see some green color, some green candles, okay? Remember, I'm in a 4-hour time frame. In a 4-hour time frame, when we look at this one, I'm showing you, when we look at, when I put there the price range, in a 4-hour time frame, this, you see, there was a crossover here, a crossover here, okay? There was a crossover here. So if someone has put in, if someone put in a trade and then saw that crossover, then put in a trade, it didn't move so well. And then you can as well say it moved from the crossover was done from here. You see, the crossover was done here, and then the movement only happened up to the 50 line, which means that movement was not so good. Then it came down, another retracement happened. We see another crossover. Where is this crossover? Let us put there a line to indicate our when it made this other crossover. See, if you can see that crossover, when it made that crossover, see what happened. See what happened. See what happened. When it made that crossover, see what happened. When this crossover happened here, see, we have two beautiful candles, which means someone who entered this trade, someone traded. If someone entered this trade there, you have seen a crossover. When you see a crossover, and then you really see that now it has crossed, you can just enter a trade. Maybe you have seen it while this candle is here. Put in a trade. You see here, it moved up to 2 to 1.5%. Remember, we are in the concentration, the kind of market, it is ranging, but someone can make a 1.5. A 1.5 movement with the Bitcoin, let me tell you, that is a very high movement. By the time the Bitcoin makes a 1.5%, other coins have made 8%, they have made 10%. The day you see the Bitcoin making 10% positive move, just know that other coins have made 30–40%. I'm going to prove to you this. We are going to see other coins. The Bitcoin moves, but its movement is so small. And that small movement, then we call them altcoins or altcoins, meaning alternative coins. So those ones, they have moved very, very fast. We are going to see that. And then let us look at another crossover. Another crossover happened here. Another crossover happened here. When it happened, what happened? What happened above here? What happened here when we saw a crossover? When we saw a crossover here, what happened this way? Let us see. What happened here? The Bitcoin moved. The Bitcoin moved from here. This is when the crossover happened, okay? On this candle. If I entered the trade here, and then I entered the trade here, and then I put in, and then it moved up to this resistance area, 5%. By the time the Bitcoin moves 5%, other coins have moved a very big distance, a very big percentage. Let's look at another coin away from the Bitcoin. Friends, please let me know. Go to the chat room if you are with me and you have understood something. Please let me know. The Bitcoin has gone up by 1.73, and it has increased its price by 457. Remember when we had started, it had increased by 406. Now it has increased its price by 458. And then the percentage change is 1.76%. Propose another coin that we can look at. Propose another coin that we can look at. Please go to the chat room. Propose. Isaac is asking, Madam, what is the best time frame to use this RSI indicator? I'm going to tell you, it is always important to do your analysis while you are in the 4-hour time frame or 1-day time frame. Then if you want to enter a perfect trade earlier, you go to 1 hour and you see what is the indicator doing. If you see a crossover in 1 hour, please put in a trade. By the time you see it in the 4 hours, in the 1 hour, you have already made a 3% or a 2%. Isaac says, Madam, I think you like 4-time frames. So is the one you also enter trade from? Franco says, yes, go ahead. You are making a lot of sense. Franco says, let's look at Acro. Odong says, let's look at T-Fuel. Another saying following. Let me tell you the reason as to why I like looking at 4-hour time frame. It is because, first of all, there is less noise. You is looking at 1 hour. By the time you make 4 hours, it means for you have looked at 4 candles. Me, I am looking at only 1 candle. I don't want to be on tension. I don't want to be on pressure, because in the 4-hour time frame, if it is showing me green, maybe in the 1 hour time frame, it is showing red. The reason as to why I want to be in the 4-hour time frame, a bigger time frame gives you ample time to do a right analysis, and it gives you ample time to do your work when you are not on pressure. Remember, I am dealing with very many people. This one is asking you this one has this one is asking this. All of them, they need my attention. So if I was trading using 1 hour time frame, I may not give them full attention because I want to check on my trades. By the way, there are people who are trading 5 minutes candle, and then someone is looking at only 5 minutes candles. So those ones, they are the people who are on the charts all the time. They are looking at the charts because after 5 minutes, the candle has changed. After 5 minutes, the candle has changed. Me, I don't want to be on pressure, and a bigger time frame gives you the right thing. And then you come to the smaller time frame for early entries. I think I have answered you that, Isaac. If I have answered, please go to the chat room and let me know if I have answered you very well. Someone says we look at Acro. I'm going to show you Acro. People love Acro. People love Acro. People love Acro. People love Acro. No problem. Let's look at Acro. Let's look at Acro. It is here. Acro is still going down. You people, I'm telling you, it is still going down. Acro is still going down. This one, I'm telling you, I have told you this is the 3rd week when I'm telling you that Acro is going down, and it is still going down. Okay, it is still going down. It is still going down. Okay, it has broken my support here. The support which was here, the support has been broken, and then it closed below it, meaning we are now heading to here. We are heading to here. If we break this one, we are headed here. But at the end of it all, we are coming here. Ladies and gentlemen, with the Acro, we are coming to 0.00794. That's where we are going. So you should be knowing, okay? You should be knowing. Why? Because I told you, we have to retrace this movement that we made. This is where we started moving from, okay? This is where we started going up from, here, okay? That's where we started moving upwards, and then we started moving, and then we moved this very long distance up to here. So we have to fill this gap. We have to fill this gap up to here. So we still have a long way to come down, okay? We still have some time to come down, though in between there, people can make money. In between there, people will make money because when it is falling, it doesn't come like a straight line. It is doing zigzag thing, but the ending, we are coming here. Let me put even there a line, okay? I don't want you to panic, just be in the know. Let us put there a line. Let us put there a line. I'm drawing there a horizontal line to know where we started climbing from. This is where the uptrend started from. It started from here. Wow. The day the acro will come to 0.00427, we shall know that it has retraced 100%. Then we get ready for another rally. I'm not saying that what I am telling you that it is 100% gospel truth. This is trading. Anything can happen. Why? Because the financial market is driven by very many other things. I am telling you this according to the indicators and how the market moves. But again, there are other factors that can as well stop acro from running up to where I am telling you. Okay? There are other factors that can affect its moving down to make a 100% fall. Okay? And this fall that I am telling you, it is not going to happen in 2 days, not even in weeks, but it might take months. And who knows, when other factors prevail, it can even end around here and then it starts moving upwards. Okay. If we have understood that one, and let us see. Hey, it is 11, friends. Let us see. The fact that it closed here, it closed below this line that I had said it was a support, and then it was broken. Let us change the color to blue. It broke, this one was broken, and then it closed below, so means we are going up to here. And again, let's look at what our stochastic, today's indicator. Today's indicator, you look the way it looks like. I think we can see. Friends, you can see the stochastic. The stochastic. The stochastic says it all, okay? Friends, the stochastic is saying it all. The stochastic is saying it all. I don't have even an explanation, but it is saying it all. You see, the blue line is below. It is behind the yellow line, or the what? The gold line. You can see it has kept on coming. You're not even seeing. We are even below the 10 line. I think now we are almost at its negatives. We are in the overbought area, meaning people have bought and bought as the market was dropping. People have been buying and buying and buying until when we see any movement from here, okay? And then you can see here, it is not decided. Friends, ladies and gentlemen, this movement is not decided. We are not decided whether we are, you see, look, I think you can see this. The blue line is what makes us know where the market is going. Now, the fact that it is even swallowed, we are still going down until when we see the blue line crossing the yellow line, and then it goes up. Then we shall see another good movement from the stochastic, I mean from acro. So if we can as well look at the crossovers that I've been talking about, let's look at the crossovers. Where we saw a crossover, where the crossovers happened. What happened after the crossover happening? After the crossover happening, look at here. Look here. After looking there, and then look here, what happened? Okay. Look here, where the crossover happened, and then you also look up here. See, there was a huge movement. Let me change this color to blue. There is a huge movement. The crossover happened here. The crossover happened here. And then you see this movement. We can measure it and then we get to know what happened when it made that movement. What happened? What happened? What happened? How much percentage did it move? It moved up to, it made an 18%. 18% movement upwards. But remember, the general trend for this acro, it is going down. But again, someone can make an 18% from there. So what does it mean? Someone who traded and got out of this trade, and then he enters it, makes a profit, and then it keeps on going down. Or even you enter it from up, and then you put in margin calls. Remember, we are trading using the martingale strategy, whereby you are buying in quantities, you are buying in margins, you are buying in margins. The lower the prices go, the more you buy and buy. So it moves up, it moves from here, it drops. You have been buying and buying. When it moves an 18%, you sell those margins. You sell the margin calls, you sell the margin calls, and you make money. Let's see another. Let's see where another crossover happened. Another crossover happened here. Another crossover happened here. We can see when it happened. What happened up here? We are going to see. Let us measure when the crossover happened. So you can trade using only the crossovers, whereby you just go to the charts looking just for crossovers. Okay, you can just go to the, and then you are looking. You remember I said always get out below the resistance line that you drew, and then you take a 5%. If you were to take a 5%, it was ending here, and then you are out. You take a 6%, you take a 7%, and then you take a 9% or a 10%. Here it moved a 10%. Yes, it moved a 10%. It moved a 9.5, a 9.9%. It moved. Why? The crossover happened. Okay, the crossover happened. Can we look for it again? Can we look for another crossover in the acro where the crossover happened? What happened? Okay, where the crossover happened, what happened to that trade? Okay, a crossover, another crossover. Where is it? Another crossover. It is here. Another crossover. It is here. And then it moves from the 50, and then it went up to the oversold area. I mean up to the overbought area. This is overbought, this way down is oversold. Above is overbought, below is oversold. Okay, the selling has happened and people have sold and sold and sold. Above is overbought, below is oversold. It's as if in the beginning I said the opposite. So I am correcting the mistake that I made. I am doing a correction. Below it is oversold, above it is overbought. Below it is oversold, above is overbought. We want to enter the market when we are in the oversold area. And then we get out before we enter the overbought area. Okay, let us see what happened. When it made a crossover here, let us see what happened. Who is that one? Someone whose phone is talking. Who is not muted, please? I think everyone is muted. I was having feedback. Okay, I was here. And when we saw another crossover, it happened here. What happened next? Let us see what happened. What happened here above? We see the movement, an upward movement from here to here. It moved a 20%. So someone who entered the trade after seeing the crossover, so someone made a 22%. What if you took 5%? What if you had taken a 5%, a 10%, and you get out of the market? But remember, the acro is dropping. Its general trend is going down. But again, it is making 20%. It is making an upward 10%, 15%, 5%, and then you keep on making money. So when we tell you that in the spot trading, you can make money either way, when in the uptrend market, or even while in the downtrend market, you can make money depending on where you are, for as long as you know how to spot perfect timings. Okay, when you want, if you know how to spot perfect trades and perfect timings. Why? How can you spot them? Use at least 3 indicators. First of all, never and never trade without support and resistance. Always have your support and resistances. You don't need to be 100% perfect, but have them. Then add on other indicators. The support and resistance, let them be there. Then add on 3 indicators. Yesterday we looked at 1. Today we have looked at 1. Tomorrow we are going to look at 1, and even on Saturday. On Saturday, shall we look for another? Or if we don't look at it on Saturday, then we shall have another day, and then we look at. I want to teach you like 7 indicators. Then you use the 7 of them. Try them. Look at them. Practice trades with them. Then you find out what is okay for you. Then you always use that one. Okay? Have you understood the stochastic? If you have understood the stochastic, please go to the chat room and give me a what? A 2, a 3. Which one should you give me? Just give me a 3 if you have understood how the stochastic can be used. Look for the crossover, always. Look for the crossover, always. Look for the crossover, always. Isaac says, I have personally been learning and studying this indicator. I really love it. I think it's more accurate than it's more accurate. Thank you for the supplement for my case. You're welcome, Isaac. Then again, Isaac says, can you please give small light on how to best draw support and resistance? Isaac says, Madam, above is overbought. Below is oversold. Yes. It's like, I remember that maybe in the beginning I said the opposite. So below is oversold because they have sold and sold and sold and sold. So the market has been oversold. And then the next above is overbought. Okay, 3, 3, 3, 3, 3. Okay, someone is saying, how best can you draw support and resistance? Find an area where there are candles that ended there. It might not be 1, but they should be 2 or 3. Find out an area where 3 or 4 candles ended in one area. That's where you can draw a support or resistance. Let me show you. Isaac, I think you can see Now for me, in my acro, I drew a lot of them. I drew many of them. Now from where we are, where my support and resistance end, then the next concentrated area, I am going to look at this one. I draw there and a horizontal line. Candles, they ended here. I can see. They ended here. I can draw there as my support or my resistance. I can come up here and then I draw here because I am having now candles which are ending there. There are 4 of them. In fact, there are so many. There are so many. Look, look. There are so many. When you look here, there are like 5 of them. 1, 2, 3, 4. Then here I have 5, 6, and then another one, 7. So that is one. That one qualifies to be either a support or resistance. If I am to draw another one, I look for the nearest where I see concentration. Now here, this is a swing high here. There was that one. So the next one, I'm going to draw high above here. So this one, a very strong resistance, a very strong resistance. You see very many candles came and ended there. So you can draw as many as you can, in order for you to be monitoring the coin that you are trading very well, okay? You can draw as many as you can to monitor your trade very well. To monitor your trade very, very well, okay? I think, Isaac, you have understood that one. You have understood that one, how to draw, how the best to draw support and resistance. Find an area where the candles ended. Then LaQueen says, I shall get access to recorded lessons. They are always uploaded in our YouTube channel. Then Juliet says, how do I enlarge my candles? How do I enlarge my candles? Okay. How do you enlarge the candles? You go to the trading view. You can put your your thumbs for both, and then you move, or just your index finger, and then you touch here. Okay, you can touch around here where you are seeing these numbers here. And then you keep on moving. You can zoom in and then zoom out. Zoom in and then zoom out. Zoom in, or even you can touch the where the screen where your candles are, okay? And then you start zooming in and out using your thumbs. Zooming in and out. Or you can as well be using your finger, your index and then the thumb finger. And then when you are zooming in and out, or in and out, in and out. So you touch where the candles are, zoom in and out. So you want the candles to be big or small. You want them to be big or small. So if you want them to be tall or short, you come to the prices. So now you zoom in this side where the prices are. You zoom in and out. You zoom in and out, zoom in and out, zoom in and out, zoom in and out, zoom in and out. You want them to be big, zoom in and out while touching the screen, moving left and right, moving left and right, moving left and right, moving left and right. You want them to be tall or short, zoom, zoom, up and down, up and down, up and down, up and down. The same thing to the indicators, okay? So lastly, I am ending this by showing you the settings for this RSI. How do you get the settings? You click on it, and then you go to the settings, something which looks like a screw. It is here. You click on it. When you click on it, it is going to take you to the settings. In the settings, we are having input, we have style and visibility. Then in the inputs, we are having K should be 4, another one 2, another 9, and then 9. Then resource, it is high, low, close, and 3. So that one don't change. You will let me take a screenshot and then I put it in the group so that you will set your stochastic. Then when you go to the style, you can change these colors the way you want. Like I told you, for me, my upper band is black, the lower band is black, and then the middle band is green. Okay. Then my moving averages, those lines that I said, when the blue crosses over the yellow one, so you can change. The colors are always there. You click on the color and then you can choose the color that you want. Opacity, make it 100%. And then thickness, it depends how you want it to be so thick. Either you can put it at 1, you can put it at 2, you can put it anywhere, or you can even put it at 4. After you have put in everything, always visibility, never do anything about visibility. And then you just click save as default. I am taking a screenshot, I'll share in the group. Then after saving as default, you click OK. So even if I have removed it, when I bring it back, the settings are still intact, they are not touched because I saved them. Ladies and gentlemen, unless you have questions, if you don't have any question, I want to end here because we have overstayed here. Please, if you have a question, ask. If you don't have any question, we can end here and then we see something else tomorrow.